In this video, I'm going to provide you with some tips for your accounting exam. They result from marking accounting exams during the last semesters.
I'm Carsten Berger, full accounting professor in Osnabrück. My basic scripts will help you to understand international bookkeeping.
These are my recommendations for your upcoming accounting exam. The first thing is, don't confuse gross and net amounts. In the first place, if it is cost of acquisition or cost of purchase, it will be always a net value. In the exam at Hochschule Osnabrück, we consider a VAT rate to the extent of 20%. If you got the net value and you divide it by 5, you will get value-added tax. If you got value-added tax and you multiply that by 6, then you get the gross value. My recommendation is always calculate in the same way. Start with the net value. Then calculate the value-added tax by dividing by 5. Then you multiply the figure with 6 and you get the gross value. If you have to calculate depreciation or interest, you must calculate them by rates. Now let's assume you buy, for example, machinery on the 1st of April. In the exam text you will see that the April will be underlined. So let's assume annual depreciation is 10,000 euros. Then the depreciation you have to consider is actually 9 months out of 12 multiplied with the 10,000, and that will give you 7,500 euros. Be always on alert when you see that the month in an exam task is underlined. Then you might have to consider depreciation or interest per rate. Bank loans will contain a short-term and a long-term liabilities. Following the disclosure of a bank loan along International Accounting Standard 160, you will find on the balance sheet the long-term portion as the interest-bearing liabilities, whereas the short-term liabilities will be disclosed as accounts payables. Make sure that you consider both components to calculate the interest. Now let's assume you got a balance sheet, and on the balance sheet you disclose a bank loan by two portions. One of them is the interest-bearing liabilities. Let's assume that would be 60,000. And in the accounts payables account, you got a 20,000, which is for the payoff in the next accounting period. If the task now is to calculate the interest, you must add first the interest-bearing liabilities and the accounts payables. Only those portions which is linked to the bank loan, obviously. So that gives you 60,000 plus 20,000, which you must multiply with the rate of interest, let's say 4%. And that gives you 3,200 euros. For any application of the overheads, you must consider International Accounting Standard 2, paragraph 13. This requires that you apply the predetermined overhead allocation rate. We actually have to calculate a predetermined overhead allocation rate. Predetermined overhead allocation rate. So the predetermined overhead allocation rate will be the budgeted cost divided by the planned performance. For the planned performance, you will have a reference unit that will give you the unit, whereas the budgeted cost, let's say, will be recorded in euros. Now we assume we got, for example, a manufacturing overhead account, and you got some items on the debit side, like depreciation, let's say 10,000. And you got, for example, salaries to the extent of 20,000. And you now got a calculation for the predetermined overhead allocation rate, which is, for example, 28,000 based on 1,000. So that would give me a 28 euros per reference unit. The reference unit's number is, for example, 800. In this case, you calculate 800 multiplied with the 28, which gives you 22,400. Now you have to make a credit entry in the manufacturing overhead account to the extent of 22,400, and you have to record that value, 22,400, in the work in process account. This is referred to as the overhead application. Now, as you easily can see, that there will be a reminder, and the reminder here is 7,600. Now these 7,600 must be recorded in the profit and loss account. So you make a credit entry in the manufacturing overhead account and you debit profit and loss. Avoid continuing your calculations by a bookkeeping error by applying a trial balance. Even if you don't write it down, just do it on your calculators. Let's say we got a few bookkeeping entries. For example, share issue, purchase of materials, labor, and a revenue. We ignore that for this example. In this case, you record the bookkeeping entries. So you start with the issued capital. Next, I balance off the accounts. Actually, I only balance off the cash bank account because this is the one which is relevant to me. Instead of drawing a trial balance, you can easily calculate. You just take negative 25,000. You're going to add 24,000. You add 3,000 for the purchases. You add for the labor 10,000. And you deduct 12,000 for the revenue as it is in credit entry. That should give you a 0. When a balance sheet is given, you must make all the bookkeeping entries which are relevant at the beginning of the accounting period. So we assume we got a balance sheet, and the balance sheet contains issued capital 25,000. Let's say we got retained earnings to the extent of 70,000. We got accounts payables, which will be 35,000. And we got income tax liabilities to the extent of 30,000. So in total, the balance sheet will give us 160,000. On the asset side, you see property, plant and equipment, and it is 100,000. You are going to see prepaid expenses, which are 20,000, and you got cash to the extent of 40,000. In this case, you have to make a few initial bookkeeping entries. The first of them is actually the payment for the income tax liabilities. You might have to pay the short-term liability. Maybe these are VAT liabilities or these are liabilities resulting from supplies. You pay the accounts payables, and that gives you a debit entry in the accounts payables account, and you make a credit entry in the cash bank account. We pretend that the prepaid expenses will be for rent. In this case, you have to make a further bookkeeping entry. You make a debit entry in the rent account, and you make a credit entry in the prepaid expense account. There might be some further bookkeeping entries you have to make depending on the case. Avoid making copy errors by writing all the figures with the thousand separator. Make use of the thousand separator. If you write, for example, 100,000, don't write it like this. Always use a comma, or if you want to, just use a point. But very often we see that students make mistakes, so they read 10,000 and then actually they copy 100,000 because they miscalculate the number of zeros. If you have to record an appropriation of profits, calculate the distributable amount. That will be the annual surplus plus a profit carried forward or less a loss carried forward. With regard to the appropriation of the profits, make sure that you consider the profit as well as the profit carried forward. You recognize a profit carried forward easily on the balance sheet. So if there is in the retained earnings at the beginning of the accounting period a number, let's say 3,000, and now you calculate on the income statement a profit which is after taxation, so it is your annual surplus, which is, for example, 10,000, then the distributable amount will be 13,000. Very often the task is the company declares a dividend of 10% of the distributable amount. So that requires that you don't forget the profit carried forward for the calculation of the dividends. Make sure that you do not mix income tax liabilities with VAT payables. So if you got an income tax liabilities account and you got value added tax and it is credit balanced, so let's assume our income tax liabilities will be 30,000 and VAT comes up with an output VAT to the extent of 2,500, then you have to record on the balance sheet the income tax liabilities under income tax liabilities, which is 30,000, and you record value added tax payables as the accounts payables. Don't mix them. In those cases, if you have to prepare an income statement that follows the nature of expense method, you must make sure that you consider changes in the inventories of finished goods. If you have to prepare an income statement following the nature of expense method, double check whether there will be changes in inventory. So you record the revenue and then you have the changes in finished goods inventories. Do not consider changes in materials, for example, because you do this anyway, because you calculate materials as an expense further down. You must consider these are the changes. It's not the value in the finished goods inventory account. So if there is an increase in the finished goods inventories, that will be plus, and if it is a decrease, it is negative. The valuation is always made at cost. Good luck for your exam.